and welcome to 3-Minute Thursdays, where we put 3 minutes on the clock, I show you our rates, and then I try to sell you on our services. So let's get right into it. Check out this week's rates. All right, that's enough of that. Let me get into the sales pitch. Today I want to talk to you about the differences between being a broker and being a traditional mortgage banker. Obviously, because I just went from being a traditional mortgage banker to starting a broker shop, but bear with me. We're going to talk about 3 different aspects: pricing the loan, in-house underwriting, and the transparency and fees and stuff like that. We're going to start with pricing the loan though. From the mortgage broker's perspective, we literally price the loan to get you the best deal by choosing the investor that has the best deal on your scenario every single time. From the mortgage banker's side, well, theirs is pretty much exactly the same, only the individual LO does not get to choose the individual investor. It's typically all built into a pricing engine. So the LO types in your scenario, and then the pricing engine is supposed to choose the investor that best fits that to get you the best deal. So in the end, there's probably not a clear winner on which piece is better. This side has a little bit more control, but this side, if implemented correctly, is going to come up with the exact same answer. That brings us to in-house underwriting though, and there's definitely a huge difference there. Conventional wisdom tells us that the mortgage banker employs the underwriter and therefore has an in-house underwriter. The theory is that they now have more control over the underwriter of that file. And that may be true. If you're an executive, you could definitely control how an underwriter gets a file done, as far as how quickly they get it done. You can make them work late on a Friday. You can do those types of things. What a mortgage bank can't do though is get an underwriter to stray from guidelines. The guidelines are set. Fannie, Freddie, whatever investor they're underwriting that guideline to, those are set. The underwriter is not going to stray from that regardless of who writes their paychecks. In fact, from the mortgage banker's perspective, the underwriters are typically going to underwrite each individual file to whatever their toughest guideline is from their toughest investor. So a lot of times they're adding overlays to your files that wouldn't traditionally be put there. Now, from the mortgage broker standpoint, you always have at least 2 options to go to if your underwriter's taking too long or causing you some sort of problem on the file. Option 1, I call up the sales rep and I say, hey, if you guys want to continue to get our business, then you need to get this fixed and we need to make sure it doesn't happen again. Option 2, if option 1 doesn't work, you just take it to another wholesale investor and get it done there. So there's always those 2 options. And honestly, neither one of those exist over with the mortgage banker. In the mortgage banker's world, if I'm an individual LO and I decide that I need something done from an underwriter's perspective, I've got to escalate it to the team lead or to the branch manager or whatever, and then I got to get an exception from them to get the underwriter to do whatever. It just doesn't work out that way. That brings us to the transparency piece. There's a clear winner there though. On the mortgage broker's side, when you go to the final closing and you sign your closing disclosure, the top of that somewhere, it's actually going to show you the exact dollar amount that's paid to the broker by the investor. 100% transparency. Everything the broker made is shown right there in black and white on your final closing disclosure. Now, from the mortgage banker's side, they're not obligated to show that to you. And as long as I was a mortgage banker, we never disclosed our yield spread premium or our gross profits to the client. It's just not something that's done. So there is no transparency there. That's where it gets a little bit tricky, because as an LO over there, as well as a customer of a mortgage bank, you never know how much is being built into the price. You just know what their stated loan origination fees are. So clear winner goes to the broker there. Keep in mind, we are a mortgage broker shop, so take everything I said with a grain of salt, and hopefully we can earn your business. Now, I'm not sure if I have any time left at all, but we're done for this week, and we'll see you next week.